Moving on, then let me welcome Rahul Sharma, who is joining us on the technical side to help us understand what should be the strategy on the benchmark indices and the stocks that he's tracking at this point. Hi, Rahul. A very good afternoon. First of all, Happy New Year greetings to you and your team. It seems like it's a good start of the new calendar year. Just yesterday, we have seen good gains, and we are just building on to the gains. 23,900 is what we have crossed in today's trading session. Rahul, what's your take coming in on the benchmark indices?
Hi, very good afternoon, and reciprocate the same to you and your viewers. Well, it is a cheerful start to 2025, and the best thing about January or rather this quarter is, there is a strong possibility that this quarter can, maybe or rather this month be a positive one because historically speaking, around 2023 years, every time Nifty has given 3 months of negative returns, the 4 month has been invariably been positive. So, that is a bit of statistic. But if you look at the institutional positioning, especially the FI long short ratio, that bottoms out generally around the 12% mark. So we have come close to 14% roundabouts, and it's a matter of time that Nifty sort of shakes out that, and we start a structural recovery from here. Uh, Zooming into what exactly is happening today. So today we have the weekly expiry for the Nifty. 24,000 is a resistance for the day. So probably in the second half of the session there could be some cooling off that can come in. But having said that, positionally, as long as we are above the 23,500 mark, we should be fine. And once we cross the 24,000 area, 24,150 is where we are expecting Nifty to sort of go on to the next hurdle, and above that 24,500 is also possible. So look to buy on dips. That should be your strategy for the current market scenario. At 24,000 today, the risk reward is not favorable for fresh longs. But if there is an intraday dip, you can be a buyer at these junctures.
All right. If there's an intraday dip, you could be a buyer at these junctures. But Rahul, help us with your take on the auto pack because that is indeed in the fast lane. So stocks like Eicher Motors, Maruti Suzuki, M&M, and even one of those beaten down names like Tata Motors is showing some strength now. So any stock which still offers an opportunity to go long from these levels?
Well, this was the weakest link in the market in the last 3 months, and auto index is something that seems to have bottomed out for now. And what that translates into is the auto stocks could see a meaningful rebound happening from these levels. Well, what looks good in terms of strength, it is Mahindra and Mahindra. That stock saw the least bit of correction. At the same time, the momentum is also the maximum in Mahindra and Mahindra, and could very well head towards the 3,300 mark in the very short term. Well, if you're an investor, I think this is a good price to get into something like a Maruti. The stock has been hammered significantly. Last 2 days, there is a volume expansion that is seen. And from a 1 to 2 month kind of a perspective, you can look to invest in Maruti for a target of 13,000, 30,200. So, from the auto pack, the other two stocks which look good to us, one in terms of a reversal and another in terms of a continuation of the current momentum, which is Mahindra and Mahindra.
Rahul, wishing you a happy new year as well. Anisha this side, but help me understand if you had to make some top bets for 2025, give me the top 2 or 3 stocks that you'd want to bet your money on.
Yeah, at this point in time, we are focusing on, the power finance companies. So PFC is something that we like at this level. One can look to buy, for the short to medium term for a target of rupees 480, 500 on the upside. Another one which looks good structurally is Kalyan Jewelers. Well, there is a breakout on the cards in the stock around 786, 790. This can be bought preemptively at these levels, and we believe this stock can very well head towards the 900, 950 mark in the coming 2 to 3 weeks time frame. So there is something which you can buy for the short to medium term. However, if you're looking for what could be bought as a yearly pick, I would rather suggest mid caps is the place to go. We've seen a sizable bit of correction happening in that space, and we like to begin with the mid cap index. You could look to buy the ETFs on the same, or alternatively, some of the auto names that we've just mentioned. So there are the few areas where we feel that there can be a significant catch up. And 12 months is a lot of time, especially when we have two bull markets and two bear markets in a matter of 12 months time frame. So the best thing to do is look at one quarter at a time, and once the quarter is navigated, you can fine tune and adjust your strategy based on what is happening in the market.
All right, Rahul, with this, we let you go on that. Thank you so much for taking